The Mortgage Minute today being brought to you by our friends at Geneva Financial. When you're ready for that next home loan, Geneva's got the programs and the products you just need to make the call. 800 306 1990, 800 306 1990. And every day at this time, OBMMI, they provide the most comprehensive, accurate, timely, and interactive analysis of pricing ever conducted in the mortgage industry, calculated from actual locked rates. With consumers across 35% of all mortgage transactions nationwide, they do not tell us points paid, points received, or the APR. They tell us the number to put in the mortgage calculator. That's the number you put in there to find out what your principal and interest payment will be each month. Let's see what the rates did yesterday. That's the latest data they have available. Conventional loans down 6.987 on the 30-year fixed. Jumbo loans down 7.157 on the 30-year fixed. FHA loans down 6.758 on the 30-year fixed. USDA loans up. That's the rural areas, generally no down payment, 6.799. And the best loan on the market for our veterans, they earned it. That's a 30-year VA loan, 6.519. That one was up. I'm going to share with you, though, don't ever look at the rates as being the item that you're going to use to determine what's the best program for you. We want to look at what is the most suitable program for you. What's your time horizon? What's your safety? What's your risk tolerance? What's the liquidity that you need? All of those things are going into your home loan. Rate is just one small piece. And as I've shared with you many, many times, you cannot go to the supermarket with rate. You need dollars and cents to go to the supermarket. Let's take a look and see what's going on right now in the markets, because that was yesterday's data, and that's the most current there is. Today we're looking at the Dow Jones, or the S&P 500 is up 59.5 points, and we're looking at the 10-year Treasury down 13 basis points. That's a good number right there. Mortgage-backed securities up 46 basis points. Why is one up, one down? Well, the 10-year Treasury is telling us about the yield, down 13 basis points. The bond is telling, the mortgage-backed security, that's telling us the bond itself is up 46 basis points, which means interest rates are down. If it holds that way, the chart that we just showed you, if you're watching us on ronsingerradio.tv or any of our socials, we'll see mostly red arrows there tomorrow. Why is all of this happening? Why did the rates change the way they did early today, even though we know that the Federal Reserve is coming out with their announcement at 11 o'clock California time? They've got a statement at 2:30 California time. And if you're listening to us again on ABC News and Talk, we already know what those numbers were, but we're recording in the morning, so we don't have that. The driving numbers for the morning, though, the May Consumer Price Index report showed that overall inflation was 0% for the month, which was cooler than estimates of 0.1% year over year. Inflation decreased from 3.4 to 3.3. Those who are ignorant will say that there's no inflation. Not true. What it is that there was no increase in inflation for the month. That means it was the same as it was last year, same month. They replaced a number from last year, and the same number that we had last year is this year, so there's no change. It doesn't mean there's no inflation. Estimates was cool. The number was cooler than estimates of 0.1%. Year over year, inflation decreased from 3.4 to 3.3, which was softer than estimates of an unchanged reading. Helping the headline was a drop of 2% in energy prices, with gasoline falling 3.6%. Core rate, strips out food and energy, increased by 0.2%, which was also 1/10 below estimates. Year over year, core CPI declined from 3.6 to 3.4, lower than the unchanged estimate of 3.5. Let's take a look at what some of the numbers really look like. While the entire reading of core CPI was 3.4%, year over year, almost all the inflation came from shelter and motor vehicle insurance. Everything else rose only 0.21% from last year. Shelter cost makes up 45% of core index, moderated slightly as we expected because of the higher replacement figure falling out of the annual calculation from last year. Overall, shelter cost rose 0.4%, causing the year-over-year reading to decline from 5.5 to 5.4 year over year. Rents rose 0.4% last month and are up 5.3% year over year, down from 5.4% in the previous report. Owner equivalent rent, which tries to capture the increase in home ownership costs, also rose 0.4% and is up 5.7% year over year, down from 5.8%. While we did not see much progress on shelter, it did moderate a bit, and the monthly readings have been trending lower and have been somewhat tamer. Looking ahead next month, the figure falling off the annual calculation is 0.41%, which will make it hard to make any additional progress unless we see lower monthly readings beneath 0.4%. But looking further, we'll see some big benefit in September and January, as those are very high comparisons. The other areas responsible for most of the inflation we see is motor vehicle insurance, and this component finally cooled off after having a string of very high monthly readings. In today's report, motor vehicle insurance fell 0.1% in the year-over-year reading, moderated from a very high 23% to 20%, causing the overall core index to fall 0.11 year over year. Motor vehicle insurance appears to be finally cooling after catching up to the big rise we saw in car prices from 2 years ago. If this trend continues, it'll help inflation move lower. Another item that helped was airline fares, which fell 3.6% last month. The other thing that we're watching this morning is the Fed meeting. The Fed's going to look at that CPI report. The Fed meeting later this afternoon could shake things up. We know the Fed is not going to cut rates, but their statement projections and Powell press conference will be critical. The Fed will likely make little changes to their statement, but they're going to release a new dot plot chart. That's basically where all 19 members say they think rates are going to be at the end of this year, next year, the year after that. It's anonymous, so we don't know who's saying what. We can kind of guess in some of them. But it'll tell us, are they looking at 2 cuts this year, 3 cuts this year? We're going to find out. We'll see that later in the report today. That is the Mortgage Minute, brought to you by our friends at Geneva Financial. When you're ready for that next home loan, Geneva's got the programs and the products. You just need to make the call, 800-306-1990, 800-306-1990.